Good evening, everyone. I'm Vaishnavi Vaiti on behalf of Atmel Strategic Advisors. Welcome to the virtual roadshow of KK Silk Mills Limited. KK Silk Mills Limited engaged in manufacturing fabrics and garments, offering products across kids, men's, and women's categories. It produces a wide range of knitted fabrics, including 100% cotton, 100% polyester, blended and printed polyester materials used in garments and applications such as men's shirts, sherwani material, ladies' dress fabrics, burkha fabrics, and cushion covers. From management team, we have Mr. Manish Shah, Managing Director. Good evening, Manish sir. Welcome.
Well, good evening, everybody.
From Axel Capital Private Limited, we have Mr. Mayank Arora, Director. Good evening, Mayank sir. Welcome.
Good evening, everyone.
With this, we'll start with the presentation. For that, I would like to hand over to Manish sir to explain the company in detail. Over to you, sir. Thank you.
Yeah. Yeah. Investor from here, Vaishnavi.
Yes, sir.
KK Silk Mills is announcing IPO as on SME platform of BSC on BSC. Company is in this journey is started in 34 years, 1991, and we are planning to issue 75 lakhs equity shares. The process is IPO will empower the three key way: enhancing manufacturing capabilities. We are investing in machine 314 crores in Pecanol looms and 314 crore in Jacquard machine and 1786786 we will debt repayment. We will reduce our bank debt and it will increase our ROE from 11.83%. Balance will utilize in general corpus purpose, including working capital, providing us the flexibility to pursue new opportunities and expand the market reach and invest in innovation. Next, our stakeholder, this IPO offer an opportunity to partner with the company well positioned in the capture growth in India, booming the textile market. Projected the reach as 350 billion in 2030, with a stronghold domestic market where the Gujarat, Maharashtra currently contribute over 85% of our revenue. We are also poised to unload significant export potential, which today account is only 0.47% of 24 revenue. Lead the season management team with over the 3 decades of collective industry expertise. We are confident that this capital investment will accelerate our vision, delivering superior fabric and garment, driving innovation, creating sustainable long-term value of our investor, customer, and communities. We invite you to join us exciting chapter with the view excellent in the future, creating long-term value of our investor and communities we serve. Next. Key fact: legacy and stability. We are in this industry in last 34 years. Now third generation is involving in that 20 lakh meter installed capacity, financial year 25 we utilization 95%, and our factory is in Umbergaon, is almost 5,422 square meter. This is a fully integrated weaving, value addition, garment and B2C. Financial milestone. In 2012, we have achieved 100 crores. 2018, we have achieved 150 crores. And 2025, we have achieved 220.77 crore. EBITDA margin is at 25.63 for PAT. Financial year 25 is at 468.29. Market research is like that. The key geographical, Gujarat is 11,629, Maharashtra is 7,942, other Haryana, West Bengal, Tamil Nadu, indirect export via global presence without direct exposure, strong repeat business, high revenue share from long-term client. Next, product diversification. Fabric, we have the financial in 25 revenue is 85.62. Garment is 14.38 revenue. Wide range is the shirting, shooting, jacquard, ethnic wear. Sustainability efficiency. We have installed the solar power in 2023, 30% lower price cost, energy efficient machinery, digital monitoring, and 30% lower maintenance cost, ECG allied eco friendly operation, future ready to go. The third generation is energy innovation. There is a B2C expansion in the name of Chrismart Private Limited, e commerce and retail. IPO proceeds to utilizations. 314.73 is a modernization. 1786 debt repayment, stronger balance sheet, operational efficiency ahead. Next, timeline. 1982, my father has been foundation about this business. They have the trading and vision and entrepreneur driving set. This what later involved professionally managed textile company. Second generation, myself entered in 1992. We established a manufacturing plant in Umbergaon. 1999, we have imported machines, soldier projectile from Switzerland that we have installed. In 2004, we have installed the Donier rapier machine. This is a little different technology from the old technology. In this technology, we can manufacture more good fabric. So that we have stabilized on 2004. Next, 2008. That time we have imported the Donier jacquard machines. In that curtain, furnishing fabric, all this type of product manufacturing is going on. We have import in 2008 jacquard machines. In 2012, garment sector we have entered and we have taken the corporate clients, all corporate orders. And 2016, we have established stitching unit in Umbergaon. In 2018, we have achieved 150 crore business. Next, and 2019, we have the fabric brand in name of textile. In that, ethnic wear, velvetation fabric, and totally we are focusing on the retail outlet. Means direct, means over the counter what people are selling on that period. And 2023, we have invested in solar power to reduce our energy cost. And 2024, our third generation is entered in B2C channel in the name of Chrismart and brand is Xkind and Johnsburg. On this platform, we are directly connecting to B2C client. And 2025, we achieved 220.77 crore turnover. Next, our vision is a very clear. We have to expand in globally. That is our target. And good talented person we have to hire and upgrade anyhow our manufacturing process and machinery and diversify the product from men's, women's, kids and all textile needs. Strategy is B2C brand online globally covering that sector to innovate the adopt the drive growth story. Mission manufacturing premium quality fabric and garment across setting and suiting, corporate wear, ready-made garment and kits. Leverage innovation technology, enhance efficiency, See, build long-term client partnership through the superior quality, champion sustainability, integrating eco-friendly practice. With the third generation now at the helm, the company is guided by a higher vision of scale, global reach, and diversification, carrying the forward entrepreneurship foundation of the first and and the technology transformation of the second and third generation, focused on achieving new milestone, expanding globally footprint, strengthening position as a leading manufacturer force in the textile garment industry. Next, about the company. The company is established in 1991. Our operating area is 5,422 square meter. We are manufacturing 100% cotton, polyester, linen, printed, all types of fabric. Our management is myself, Manish Kesa, and my younger brother Nilesh, who's handling totally manufacturing side in very good way. Our commitment, excellence, and reflecting our use premium microfiber, wide varieties weaves, including plain, twill, satin, dobby, structure, all type of weave we are manufacturing. Best best product we are always trying to supply by leveraging advanced technology. Our product offering strengthening stakeholder partnership. KK Self must continue to scale with the new height, meeting the evolving demands global market while carrying the forward legacy of excellence. Next, unique selling proposition. Legacy already we have, and leadership already we have, because of we are in this market in 34 years. Always evolving, continue adapting the new technology. Recently also we have imported new technologies. Proven ability, state-eyed industries shift to consumer trend. Fully integrated value chain, weaving value addition garment. Strong infrastructure already we have. Portfolio always we are diversifying, like fabric to garment, garment to kids, ethnic wear. To control the cost sustainability, we are now following solar power already we installed in 2023, and for future already third generation is entered in, and that also focusing on digital platform B2C. Next, our geographically spread. Our office in Mumbai, in Lower Peril area, Cable Industry Estate. Our four plant in Umbergaon, in GIDC area. There is a plot number 1401, 603A, 1401 oblique 1, and 406, and plot number 603B. And our fabric warehouse in the Bhiwandi Aryan Commercial Complex. Next, this is our fabric type: checks fabric, cotton linen fabric, double cloth, jacquards, structures, all this type of fabric we manufacture. Next, this is our garment. This type of all garment we are manufacturing. Next, this is our manufacturing facility for the woven machines, warping, jacquards, all this type of machines we have in the. Next, this is our garment facility, all garment units. Next, the business process. First, we used to develop the design and everything. Then, after as per design, we are procuring the raw material. Then, after we send for the raw material for the yarn dyeing. Then, after we do the warping, sizing, weaving, processing, and dyeing. and after that we'll make the quality assurance. It will check thoroughly by in our department. Then after we sales and distribution. Next. Next, this is a garment division. How we produce the garment. First, we develop the garment, design and develop. As per that, we procure the raw material fabric. Then after we send for the garment production. After garment production, we'll make the sure about the qualities and we'll do the all QC checking and everything parameter is there or not. Labeling on proper size and everything that we'll check. Then after we supply the goods. Next. Already we in production efficiency we have achieved. This is a very key factor. In cost saving already we have achieved also by solar power. Power already is a controlling by 30%. Next, maintenance. Maintenance we already reduced to import the new technology by maintained by the digitally systems and everything. Overall, high productive controlled operating cost is already is there. EBITDA margin, future ready to scalability, superiority, sustainability, advanced value creation, stakeholder company, cost saving, efficiency gain, environment, reasonable growth. A power track record of continued evolution from trading, manufacturing, value addition, garment, retail, and digital B2C expansion. Under this third generation, leadership is ensuring the legacy is continuous with the new milestone ahead. Next. Myself, Manish, 56-year-old. I am a managing director. This company is established in 1991. From that time onwards, I am in the director position. He is my younger brother, Nilesh, who is handling the factory. He is a director from 2000 and he is a 48 years old. And after Asha, this is my wife. She is an executive director. Next. Operational focus already we have. The company is actively working in enhancing operational efficiency and reducing overall cost. Upgradation or installation of high speed and modern machines to increase the productivity, improve the quality and reduce downtime. Leveraging automations and digital solution, streamline process and minimize the wastage. Optimize of manpower. With the better machinery and technology, dependency on the manual intervention will reduce, leading the leaner operation and cost saving. Focus on efficiencies. This initiative will result in a faster production cycle, higher consistency and improved margins. Next. This is industry's overview. Indian textile industry. In 2016, we have the 137 billion. Up to 2000, we are expecting it will cross the 350 billion. Apparel industries in 2020, 78 billion. Already in 2024, 100 billion crossed. Fabric production in India is in 2021, 320 crores and 2024, 508 already we achieved. Next. This is revenue from operations. In June quarter, 5,433. In 2025, March 2025, 22,077. 2024, 19054. And 2023 is a 18880. Expense in quarter 5243 25 218 483, 2024 18835, and 2023 18739. Profit 207, before tax, after tax 151, and 2025 468 profit. 2024 is a 226 after tax, and 2023 is a 106. Next. Long-term borrowing is a 487.73. Deferred tax liability is a 178. Long-term provision is 6.63. Short-term borrowing is a 5868. Trade payable 5282. Other current liability 123. And short-term provision is 146.55. Long-term and loans and advance 1955.99. Other non-current assets 27.53. Inventories 6606. Trade receivable is 6009. Cash and equivalent is at 39.90. Short-term loan and advance 1092. Other current asset 484.38. Next. This is the cash flow companies. Activate in June 25, 437.23. Investing activities 257.53. Financial activities 166.74. Net increase in cash equivalent 12.96. Beginning of the year 26.94. End of the year 39.90. Next. Strategic advantage, our competitive strength. Diversify the product and portfolio. Extensive range of woven fabric and garment including 100% cotton, polyester, blend and printed fabric. Cater to kid, men's, women's segment across fashion, upholstery and technical textile. Reduce the reliance on single product. Foster innovation, enhance revenue stream for the long-term sustainability. Commitment to quality. Rigorous quality control measures ensure every product for plain to doby fabric. Skilled professionals deliver superior product, consistently surpass client, solidifies reputation for the excellence in the textile industries. Next. Strategic advantage. Strong customer relationship we have. Focus on diverse customer need builds enduring relationship with the wholesaler and repeat client. Drives repeat business, enhance customer retention. Provides competitive advantage, expanding market presence and securing new opportunities. Experienced leadership, led by the promoter Mr. Manish Kantilasa and Mr. Nilesh Kantila Jain, with over 3 decades in the textile enterprise. Management team drives strategic growth and innovation, supported by the robust Awards program, ensure high client satisfaction, sustainable success through a motivated professional team. Next. Business strategy, leveraging market scale and relationship, maintaining edge over competitor, striving for the cost efficiency, improving operational efficiencies. Next. SWOT analyze overview. Strength. Large demand-based clothing and textile are essential, ensuring the steady demand. Skilled and abundant workforce, quality product. Weakness, high inventory level, high labor cost. Opportunities, growing demand for sustainable product, expanding new geographical market. Threat, increased competition from the local and big player. Fluctuation in the raw material price. Next. Investment rationale. proven industry agency. Okay, we are already in the 34 years in this industries. Good experience. Revenue momentum continue in our company that reflecting from 22 to 24. Investment rationale 1500 lakhs IPO proceed to repay debt, enhance the financial health, and reduce the interest cost. Investment 6015 to modernize the machinery and jacquards, 11 picanol loom, 11 product efficiency and product quality. Optimized operational capacity, achieving 95% capacity utilization at presently, 20 million fabric already is manufacturing. Versatile in product diversification, offering a wide array of fabric, yarn dyed, dobby, jacquards, garment. Our revenue in 85.62% in from the fabric and 14.38 revenue from the garment. Emerging export opportunities with the only financial year 25 0.06 revenue from the export. But our second, third generation is now it will create the opportunities in export, and we are expecting 50 billion. Seasonable leadership expertise, though already we have over the 50 years collective knowledge we have. Favorable Indian textile industry value 209 billion expected to reach 350 billion by 2030. Supporting by the government initiative like permit and PIL scheme. Today the government restructuring the labor law also for the textile sector. Maybe within 3 to 4 days we will get that every chart. Today only government announced. Almost from Europe, our trade will be the free, and that news maybe we will get within a week. Against that, the government also planning to restructuring all labor law. Rising profitability is already there. EBITDA margin is 6.34 in financial 25. Right. Next, issue highlights. 75 lakhs equity shares, face value 10 rupees. Issue size is 28.5. Price band 36 to 38. Lot size 3000 shares. Issue will be open on 26 November and issue will close on 28th November and listing date will be 3 December. Next, object of the issue. Our company proceed the net proceed from the issue towards issue related expense, net proceed the issue the company, utilization of the net, expenditures and replacement in plant and machine, that was the 314. Debt we will pay 1786 and general corporate purpose. Next, thank you.
Thank you, Manish sir, for the detailed presentation. Investors, the floor is open for Q&A session. I request all the participants to post their questions in the comment box. Thank you. So first question is from Mr. Jatin Bhandari. What strategies are being undertaken to strengthen the B2C and retail footprint?
ऑलरेडी स्ट्रेटेजिक लिया हुआ है कि हम लोग फर्स्ट हमारा प्लेटफॉर्म भी डेवलप कर रहे हैं और अदर प्लेटफॉर्म लाइक मिंत्रा, अमेजॉन, टाटा क्लिक, नाइका, उस पर सब पे हमने ऑलरेडी हमारी विजिबिलिटी ले ली है और मार्केटिंग ऑलरेडी स्टार्ट है. हमें ये एक्सपेक्ट है कि B2C का चैनल हमारा ये साल करीबन 25% ग्रोथ दिखा देगा और इसको धीरे धीरे विद इन 2 ईयर के बाद हम लोग डायरेक्ट रिटेल के स्टोर ओपन करने की प्लानिंग कर रहे हैं, बट दैट विल बी द आफ्टर 2 ईयर और 3 ईयर, क्योंकि जब तक ऑनलाइन प्लेटफॉर्म पे एक स्टेबिलिटी नहीं फील होवे और हमारे खुद के प्लेटफॉर्म पे कंज्यूमर की कितनी रीच होती है, अकॉर्डिंगली फिर रिटेल का फुटप्रिंट तैयार हो जाएगा। जतिन जी, थैंक यू।
Next question. Rupesh Pawar. Hi, good evening, sir. What role does B2C expansion through Chrismart play in the company's future roadmap?
About Chrismart or about KK? My question is that what role does B2C expansion through Chrismart play in the company future roadmap? Mine, can you
See, Chrismart is an associate company. Okay. Uh, Chrismart has its own platform and its own website, which is available in the public domain, public reach. And KK manufactures the goods for Chrismart, and all the manufacturing is done for Chrismart by KK segments only.
Okay. Next question. Mr. Tanmay. Good evening, Manish sir. My question is, what was the key strategic rationale behind the IPO?
Mine, can you give me the answer, please?
मनीष भाई ही इज आस्किंग रैशनल, क्या ऑब्जेक्टिव है, क्यों हम करना चाह रहे हैं आईपीओ, क्यों आईपीओ का क्या अपना
नहीं, वो तो
क्यों करना
क्लियर
चाह
है।
रहे हैं?
Reduce our debts and expand the new modern machines.
Okay. Next question, please. Next question is from Mr. Akash Joshi. What are your key product categories and how do they cater to both premium and mass market segments?
Our key product is shirting fabric and suiting fabric. In that, cotton also there and linen also there. That is a premium fabric, fabric key product. And in that, almost depends on season to season. Premium is selling in particular month, and low segment is selling in particular month. So accordingly, we are always planning, but we are more focusing in shirting and shooting than after garment.
Okay. Next question. Nidhi, what is the PE ratio?
Bank.
P ratio is 14, approx 14x, approx post multiple.
Okay. Next question. Chirayu Mishra, what is the long-term strategic vision for KK Silk Mills over the next 3 to 5 years?
Good question, Shreya, you ask. Within 3 to 4 years, will more upgrade our.
Sir, Manish bhai, I just want to refrain this question because forecasting will not be allowed, like by the
Okay, okay, okay,
regulatory norms.
okay.
Can we move forward to the next one? Vipul Chandra, is there a planned dividend policy on once profitability stabilizes?
Yeah, we have already drafted a dividend policy, which is available on the website of the company. So yes, we may, as we already have the eligibility criteria, and also we have also drafted the policy as well.
Okay. Next question. Vipul Chandra. Good evening, Manish sir. What immediate priorities has the management identified post listing?
Immediate will pay the bank debts and modernization the machinery for which we have planned, and already for the machine order we have booked also. That's all.
Okay. Next question. Vedant Ahuja. Hello, Manish sir. My question is simple. Like, how resilient are margins against raw material inflation and power cost fluctuations?
Raw material fluctuation we are maintaining very well. Like we never reduce our stock level inventory, and yearly average price by we are working. In low price also we are buying, and in high price also we are buying. We are doing in the average price working, and power price is not that much fluctuation in core industry. Is almost the fluctuation is of the 15 paisa, 25 paisa, 50 paisa per unit. But already we have installed the solar power. So against that, the 30% power saving is already is going over there. Yearly power price is increasing hardly 50 paisa, 70 paisa only nowadays. Previously it's too high. Now they have reduced also. Like every Gujarat also is more focusing on industry side. That's all.
Next question, please. Kabir Arora. Hello, sir. My question is what factors supported the increase in PAT from 3.91 crore in financial year 24 to 4.68 crore in financial year 25?
Good question. In 2024, already we have installed the solar power. Against that, the 30% power saving is kept. Interest rate also we have reduced. Bankers all interest rate is reduced, and market has been very stable. The raw material fluctuation in the particular this year is a very low. Our selling price was the already is high as per in 2023. That price only continue we have maintained. So that's why the increase of profit in 2025, and our sale also growth by 15%. Is previously it was 190, now is at 220. That difference also there.
Okay. Next question. Parth Verma. Hello. How does the three generation leadership structure contribute to continuity and strategic vision?
Good. That is a my son is a Herschel. He will look after the textile business. He's just now uh, with my brother, and my nephew Naman. He's looking after the garment, his own brand, our own brand, in the name of X kind. This is strategic planning already we have done.
Okay. Next. Kabir Arora. How has IPO driven debt reduction improved your capital structure and financial ratios?
Yeah, but naturally it will improve. It will increase our profitability. Like it will reduce our interest cost, and capital structure also will improve, and financial ratio will also improve. Next.
Next question. Rajdeep. How does your valuation PE, PB, EBITDA compare with listed peers in textile SME space?
Mike, you have to reply.
See, we already disclosed in the RHP and also in DRHP. Our pyramids are Baswara, Sierra, Sangam. So, comparatively, our PE multiple is quite low if you see. Post listing, it may be different. However, we have compared the valuation and the PE multiple, it is quite low.
Next question. Prashant Parekh. How does management balance legacy driven stability with modern innovation and scalability?
How does management balance legacy driven? This little bit I didn't understand these questions. Can you explain it me? Which way he want the answer? Mike, can you understand these questions? How does the
Yes.
management balance legacy?
Mayank sir, will you take this
Uh,
question?
मनीष भाई, they want कि आपकी जो लीगेसी है और मॉडर्नाइजेशन,
Hmm.
आप जो इनोवेशंस है, जैसे आपकी यंगर जनरेशन मॉडर्नाइजेशन कर रही है और आपको अपनी लीगेसी मेंटेन करनी है, आप उसको बैलेंस कैसे कर रहे हो?
ऑलरेडी मैं इंडस्ट्री में हुई हूँ, और उसको बैलेंस करने के लिए, जैसे जो भी लेजेंसी को बैलेंस करने के लिए, वो तो डे टू डे डिस्कशंस और साथ स्केलेबिलिटी। ये क्वेश्चन थोड़ा सा मेरे अंडरस्टैंड।
Okay. Next question. Prateek, how is the company positioning itself as it transition into a listed entity in terms of governance and transparency?
Mayank?
See, the company is 34 years old, what we have evaluated, and the company has already appointed CS with one assistant CS. So in the secretary department, there are two people, and since last what I know, like we have completed the due diligence of the company. All maybe few things were wrong. We have rectified the things. Few things were compoundable. We only pushed the compounding applications. And what as far as I know, Mr. Manish, so he is mostly compliant driven. Whatever things are compliance friendly, he does those things only. That's it. Yes.
Okay. Next question. Rajdeep, what incremental annual revenue can your new machinery or capex funded through IPO generate and optimal utilization?
Revenue will be the increase from the 5% to 10% on average, means overall revenue. And the new machinery, what the capex will do, so it will almost, utilization will be the 95%, 5%. Revenue will be the increase by 5 to 7%. Next.
Next, Chirayu Mishra, thank you. All the best for your coming IPO. Thank you and all the best for the IPO. Thank you for answering my questions. All the best for the IPO. Best of luck. So, sir, I guess we have covered majority of the questions. Thank you so much for being here. Thank you everyone and all the best for the IPO. Thank you.
Thank you, everyone.